available at Walmart.
Okay, on the day when one of the highest profile chief executives in the banking world has walked following the LIBOR scandal, let's take a look back at some of Bob Diamond's thoughts over the years on risk and regulation during the financial crisis.
I think the key for banks, for regulators, for everyone is to learn from the mistakes that have been made. And we're very supportive of the recommendation that the Fed becomes the lead regulator of financial institutions in the U.S. We think that clears up a lot of confusion, and they're absolutely the right regulator. We want a safe and sound financial system. We want banks that are confident, strong, and willing to take risk, in particular willing to transfer risk and transfer capital and transfer investors across border in support of international trade and cross-border flows. We decided to take what we acquired with the Lehman's acquisition around cash equities in the advisory business, and rather than try and purchase the Lehman business in Europe and Asia, to take the strength of the U.S. franchise and then build out. Putting our risk and our capital in our client businesses rather than in separate proprietary trading groups is right for us. It's the business model that we want. We want to stay very close to the clients, and that's where we think we have a value add.
Okay, joining us for more is Ryan Mumy, founder and president at Mumy Financial Advisors in Charlotte, and of course still with us on set, Stephen Pink. Ryan, to you as we look ahead to the U.S. trading day, practical implications of this news out of Barclays.
Good morning. Well, unfortunately, Mr. Diamond, who is a well-respected CEO, was, as your previous guest said, a little bit of a scapegoat. But right now, many of the banks are getting looked at under a microscope, and many of these things are coming out. One of the takeaways is that it takes the spotlight off the United States banks right now, who unfortunately are, as I said, being vilified, but they have very strong balance sheets relative to where they were a few years ago. So as your previous guest said, there could be some opportunities in the finance sector in the coming months.
In which particular companies do you think, Ryan? Where are you looking?
Well, we like Bank of America. Bank of America has a very good cash position right now, as well as Wells Fargo, who Wells Fargo doesn't necessarily have the institutional side exposure that Barclays and Bank of America and JP Morgan does, but they have a very good balance sheet. So those are two United States firms that have a lot of upside with a good balance sheet. And once the headlines take away from all the pressure on the banks and the news media, and they start looking at the true intrinsic value, we could see a nice run in those two particular companies, as well as the overall sector.
Stephen, there's been no shortage of attention on these banks, but there's also been no shortage of mispractices. I mean, some of the stuff that's not getting attention, the mis-selling of swaps products, the concern over pay. I mean, all of these issues, I think perhaps in Barclays' case, added to pressure on Bob Diamond, but there were real instances here of wrongdoing, maybe at least of misleading people. So what happens next?
Well, that's a fantastic question, and I wish I had a crystal ball with the answer, and that's one of the great worries. There's more to come. We know there's more to come on the issues we know about in terms of the LIBOR fixing. And we also suspect there's other things to come out in due course as to who is in the frame, which company's in the frame. You have just as good an idea as I have, and it clearly creates a big question mark for investors as to, how do the banks clean their stables? How do they actually get things tidied up and shipshape? It's a long, laborious process. It has to happen, I think, for the good of the UK market in relation to Barclays, but global markets as well. Confidence needs to be restored in the system, and the pressure is going to mount on both politicians and regulators to actually see this process through.
Would you prefer to see an internal or an external candidate succeeding Bob Diamond?
My view on Barclays, I'm not a shareholder in Barclays. I'm watching very closely from the wings. I think there's only one answer to that question, and that is most definitely an external candidate. I think you need that the fresh set of eyes from an appropriately qualified individual. Has to be external, no question. And I think the combination of the chief exec and the chairman, not necessarily this chairman, I would have preferred if Sir Michael Rick, the senior independent director, became chairman, and then you had the new team going forward for shareholders in terms of the chairman working hand in hand with the chief exec to reshape, reform the group and drive it forward. That would be my preference.
It's quite nice. We have tweeters who tweet in suggesting who they might think would be suitable for the top job. Someone tweeting in saying Jim O'Neill to be the new CEO at Barclays.
Oh my goodness. Jim O'Neill's name comes up
Speculation.
for everything. Just, Stephen, I'm wondering real quickly what the practical implications are for LIBOR. I mean, this is a rate that is key to the financial system, but also that people over time have lost confidence in this.
Yep.
These issues are years and years old. What do you do about LIBOR?
Well, LIBOR is not something I suppose we all come across LIBOR, actively or passively in our lives. But I personally did not know how LIBOR was arrived at until relatively recently. It's
think a lot of
it has
people
been
did.
revealed to be
Yeah.
a relatively archaic process. Will it be revised? My view, most definitely yes.
Because we're showing there, this is the question that the BBA asks to banks each day. At what rate could you borrow funds? Were you asked to do so, et cetera, et cetera? You can see there. Were you asked to do so? Were you to do so by asking and then accepting interbank offers in a reasonable market size just prior to 11 a.m.? Now, this particular way of doing so has only been the case for what, 15 years or so, and perhaps a regrettable.
It does seem,
move.
when you look at it fresh. I mean, I'm an equity guy, and really not dealing with bank and interbank dealings. But it was an education for me, I confess, and it doesn't strike me as being 21st century.
No. Ryan, a quick comment from you. Non-farm payroll data this Friday. What are your expectations? About 10 seconds to go.
I would expect them to surprise a little bit to the upside, but not to be anything outstanding. Our economy seems to be a little bit into a moving sideways.
Ryan, thank you very much. Pleasure having you on the show today. Ryan, thank you also to you, Stephen, as well. Pleasure having you in the studio too. That's it.
Thank you for your help today.
Thank you very much for your
Becky
good company.
Meehan will be here tomorrow. And now here's Squawk Box. We'll see you right back here. Stay tuned.
Business Intelligence.